All right, good morning, everyone. It is 8:43 in the morning of February 9th, 2022, and this is my pre-market strategy session. And I titled this one, Don't Chase. The reason that I did that is because the buy the dip, it's in FOMO, fear of missing out. So we've been conditioned to buy the dip. It has worked beautifully. Here's the E-mini S&P futures right here. Buy the dip has just worked out beautifully over the past, 2 years easily, ever since the big dump from the pandemic, rolled through. Buy the dip has it's really even, worked just really well. This one, I want to say this one's different, which is, kind of like the last words of everyone who's ever failed on Wall Street. But the economic conditions are different going into this one. And so what is interesting and what we should see here pretty soon it looks to me like this is a shakeout in the market. This dip down here, right in here, that is not a buying opportunity, in my opinion. I don't think that we're going to see higher highs out of this sort of rally. So let's see here real quick, just from top to bottom. It's a 12% pullback. That's a beautiful correction. And things have gone quite some time without a correction. Let's look at this correction back. Let's look at this pullback right here. Let's see if that's correction territory. Actually, you know what? The thing dropped down to over 10%. That's not bad. Somebody's been saying there's been no correction for like a record amount of time, but a 10% pullback is a correction. This happened from the 1st of September 2020 to the 25th of September 2020. I guess usually annually speaking, there are at least, one pullback. There's one correction per year that's at 10% or something like that. Anyway, the economic conditions going into this period, starting here going up to, let's see, right there. This is all Fed. This is easy money from the Fed. And basically the Fed in March, next month, we're in nearly the middle of February now, is going to have completed its quantitative easing program, and is also talking about tightening rates. And so this period right in here is a different economic, it essentially represents a different economic regime going forward from that point on. So somewhere around, let's say, March, I'll call it mid-March, right here, things change. The Fed is no longer going to be providing quantitative easing, and it's going to raise rates, starting roughly right in here, right in this March timeframe right here. So that's the end. This beautiful bull move right here is coming to an end. That's not to say that there won't be more upside. That's not to say that things won't dip down and then continue further. But this leg right here, this leg that went from the depths of the crash in February of 2020 to where we are now, what is it, almost 2 years later, it's over. The next leg, I don't know what the next leg is going to look like. I tend to think that it's going to be to the downside. I think there's going to be, it's my personal opinion, given the change in the economic environment. I think that we're looking at negative performance for at least a short term, from a short term perspective, less than 6 months or less. there's a really significant skew to the downside in the options market right now. And that actually is going to be fuel for the market to move sideways for quite some time, in my opinion. And I don't have the skew, I don't have the numbers on me right now, but the options expirations that's coming up here in the next, let's see, on the 18th, it's the third Friday. Actually, technically, it's the third Saturday is when they expire, but the last trading day is the 18th. There's a rather significant skew to the downside in the options market. And so actually that leads me to believe that on a weekly basis here, let's look at the weekly chart. This thing's going to drag on into next week up into, this area right in here. I'm not bearish right now, but given a little bit of time, I think that we start to explore the downside of prices again as people exit. There's a whole globe worth of places to move money where, things are going well. For example, apparently, was it Thailand? There's like some South Pacific types of places that are looking at good economic conditions for investing. So money is going to move around. Although I am bullish long term of the market, I mean it's time to pull back a little bit here. Look at this thing. That's parabolic. That's if you take this chart and just kind of look here, and that's parabolic. That's a parabolic move right there. I think that we're going to see, this is just my personal opinion, the way economic conditions are forecast, I think that we're going to see a Wyckoff distribution up here. So we're going to see some moves up here for a little bit until it starts to fall away. That's my personal opinion. And that can take, over a year. It could be a long time, so it's nothing immediate. For the short term today, I am looking for opportunities to short this rally. I think this rally, this leg of the rally right here, doesn't have much time left for its next move to the downside. My personal opinion. I'd give it weeks and months between, let's say 6 to 12 weeks, 3 to 6 months. Is that right? No, 1.5 months to 3 months, and we'll see the end of this leg up right here. I seriously doubt it would make it much higher than 4,600 right here. 4,600 right here. So anyway, total personal opinion, and I am definitely looking to sell into the strength. We are not setting up for economic strength right now. It's we've got some territory to cross. I think that the options market is, Wall Street hates paying off puts, and so Wall Street's playing its games to keep this thing elevated, so that they can just kind of farm out or not farm out, but what's the word that I'm looking for? Harvest. All those premiums, all those options premiums. So patience is necessary. For the time being, I am still looking for bearish setups to trade. And so I have not gotten in the past 3 days here, or I should say 2 days actually, and going into today, things are looking pretty strong going into today. So, I will really have not gotten all that many setups for shorting today. So, if you want to trade to the long side, it's probably, I don't know. I think there's a lot of downside, and there's short-term overbought signals all over the place in the market right now. And I would be looking, again, for today, I will be looking for opportunities to short the market for trades. Tesla here is definitely quite elevated. I've got 943.90 as a level here on Tesla for the top end, and I will be looking for an opportunity to short there. If that doesn't work out, then I'll use sort of the official. I get this 967 from a hedge fund consultancy firm, and if Tesla today, I'll be watching Tesla today for this move here. Let's see if I can. Yeah. So if Tesla today decides to pop up above 943, retest and continue on, then I'll buy the continuation on that trade today. But it's only a short-term trade. We're getting really close to the top end of the risk range of the consultancy firm. My level here is at $943.90 on Tesla. And then Amazon is doing an amazing job here. It's the risk range on Amazon, the top end of the risk range on Amazon just moved up quite a bit, and the bottom end of the range kind of stayed basically where it is, around the 2600, mid 2600s. Again today, it's looking to me like things are getting close to the top end, and it will be a good spot to look for a short opportunity. Let's see, so the Qs, I don't have those up. Let's go to the NAS. I'm going to go to the risk ranges. Here we go. So the NASDAQ here is above its risk range, and it'll open up higher, approximately, I think, let's see, I don't have the futures on the index up, but roughly was at 14,896. Let me add that to my risk ranges here. It's NASDAQ, the futures, we'll use the mini current contract. NASDAQ, I thought I'd added this already, as well as the NASDAQ volatility. Okay, so 14,923. Yeah, that's, so 14,923 is right here roughly. So this thing is definitely acting as though, let's put 14,923 up here. 29. Okay, I'm going to change the color of that real quick. I'll change it to white. So if it opened up right now, this is where the NASDAQ would open up. And this thing is definitely looking like it's trying to put a lightning strike pattern in, that sort of familiar, run up, pull back, beat the high momentum type of move. I don't think that's what happens here. I really don't think that it goes up above. It's got to break. The NASDAQ right now has got to break 15,196 in order to start the next leg up, in order to get the next leg going. I don't think that's what's happening. In my opinion, I think we're setting up for something more like that right there. We'll see. We've got another week until those options expirations hit. So yeah, that's pretty much it. Looking for an opportunity to jump into the downside on Amazon and Tesla, just sort of risk manage from there. All right, everybody, that is the morning strategy session. Let's check out Bitcoin. And actually, Bitcoin is really quite impressive. Talk about here it is on the 4th of February. Actually, no, let's pull up another window here and look at 4th of February on, let's say the NASDAQ, 4th of February here. Where is the 4th of February? 28, 2, 3, 4. Interesting. Okay. Well, Bitcoin is saying risk on. But there's something kind of interesting happening too with Bitcoin is that if there's ever been an example of the utility of Bitcoin, it's this trucker thing that's happening in Canada right now. Apparently, there is support going into this trucker protest, and they're protesting something the Canadian government, and I don't know what exactly it is. The Canadian government is trying to mandate something about vaccinations for truckers that is interfering with truckers' ability to perform their very necessary jobs. And Bitcoin has somehow become a means of of exchange that is making it obvious to everyone that there is a value, a utilitarian value. I say utilitarian, that's not exactly the correct use of the word, the philosophy, but I like the word utility. So anyway, it really is sort of making the utility of Bitcoin obvious to a lot of people. And so demand has gone up for Bitcoin. And this 42,000 level right here, that is a neutral level. So the way I see things is that let's go right in here. Oh, that's neutral. Oh, the macro show is starting. If you hear that noise in the background, let me mute that for a second. I need to get going. So this area is neutral right here. I'm going to call that, we'll call it off-white right there. This area is bearish. And then this area up here is bullish, sort of an upside down light right there. So what happens with Bitcoin here will be very interesting to see it come down, test this area and move on and move back toward 53,000. That is a really good indication for Bitcoin kind of finding a slot in here in this value area right in here. All right, everybody, good luck out there. Keep your wrist tight, click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow's strategy session. All right, I am out.